So this is the week ending 2nd of April. Okay, so this was a very short week where we can see that 2nd April and 1st April, then we have 30, 27. So this was a 3 day week where we had 2 days holiday. So a very short week, but the movement that happened comprised of a long week. You'll understand what I mean by that. So this is kind of a first day where on 30th March, right, Nifty gap down and it closed by falling 2.1%. So that is a D fall with a nice gap down. And it broke below all the levels. So basically, last week we were talking about this day as day one. Okay. So if this day is day one, then it needs to sustain the low of that day. Got it. But as we were speaking, that this low should be held if this is day one. So 22,624 was the low that we marked. But suddenly, what happened on 30th that this was broken convincingly, and the Nifty made a low of 22,283. That was a very bad closing, but beyond that, it tried to recover on the second day of the last week and took resistance on its short-term moving average. Like you can see this dark line, right? So this is a short-term moving average on which it hit and it went down. And beyond that, it made a low of 22,182 and it recovered handsomely and closed within, say, 88% of its closing range. So that was a very nice closing. So, but the volume was low on this day, on Thursday. So, this kind of a good closing, and we can mark this as day one. Okay. The low of 22,182 is to be watched going forward. And if we have to look out for what all things that we spoke last week, so there were two gaps, right? So one of the gaps that we had was around 22,254. So we were of the point of view that the way the Nifty is falling and the intensity that is there, so there is a high probability that this gap of this level, right, 22,254 might be filled. So it went close to that level around 30th March, but it recovered from 22,283. So again, that gap was not filled. But what happened on this 2nd of April, right? So this day, so basically it made a low of 22,182 and this gap was filled. So basically all the gaps in between which was there, like two gaps were there which we identified. These gaps are filled after this fall of 2nd of April. Okay. So this was a good one, I would say, because it made sure that the gaps are filled. Okay, so that's a good thing. So that target is done, which means that we don't have that shooting range of those gaps where we would be waiting for the future that this gap might be filled, right? So that case is gone. So all the gaps are filled in this range. So that's a good sign. Second good thing is we have had a great closing range, like 88% closing range was there on 2nd of April, which was a very good sign. And this day marks as day one. Okay. By day one, we mean that this might be one of the early signs of bottoming out. Okay. Which also means that if the low of this day is held, right? So we can anticipate a follow through day between day 4 and day 7, next 2 weeks to say. Okay. So we'll have to wait and look for further recovery in coming days. So that would be one watch out or the watch out scenario to look forward to. And beyond this, obviously, the geopolitical scenario is very uncertain, and the war has already ramped up massively, and multiple events are happening right now. So that is not in our control. So basically, we'll have to see whatever procedure that we follow that works out or not. So for now, we'll mark it as day one on low volume. So this volume on recovery was very low. So the sell off happens on high volumes and the recovery happens on low volumes, which means that strength is again not there, which also means that buying is not emerging after this steep drawdown, right? So till now, the Nifty has corrected around 15%. Yes, 15% correction has happened till now, and beyond beyond that also we have seen no covering, right? So that's not a good sign. So we'll have to wait and see if further buying emerges based on high volumes or not. So till now, we can conclude that all the two gaps, like we identified last week, are filled. So to fill that gap, the Nifty had to close, or Nifty had to come down below 22,254. So it made a low of 22,182, and that is why we can say that those two gaps are filled, right? So that is point number one. Point number two is day one is done. So day one low of 22,182 we have to look forward to, and we have to see if this low is being maintained or not. Number three, the volume is low, which means that this is a reversal recovery or a short covering rally, to say that the short guys, the guys who are selling, are tired of selling, and this is kind of a reversal recovery on low volumes. And point number four would be we have to look for buying signals, which means that we have to wait and see if follow through day happens between day 4 to day 7, right? So we have 2 weeks in hand right now that would define if bottoming out scenario has happened or not. Okay, it's as simple as that. All these points would be negated if Nifty continues to make lower lows and it takes resistance on all the moving averages that you can see above, right? So basically, right now it is taking resistance around this short-term moving average. Every time it hits this moving average, it comes down, right? So we'll have to see if it recovers above this moving average and closes for 2 or 3 continuous days or not, and then it tries to hit like 21 EMA, right? So we'll have to wait and see and look forward to that. But for now, any global or geopolitical event that triggers the sudden spike in crude oil, right? So right now it's hovering around 109, $110 per barrel. So that's a bad scenario for the Indian market. But any worse or any worse thing would happen if it tries to run towards 150 dollars per barrel, right? So that would be a difficult scenario to be in, right? And further sell-off might happen. Number two, the weakening of the rupee, right? So rupee has hit like 95 point something, and it has recovered convincingly in last 2 or 3 days. So that's a good sign, but again, it's kind of much weak against all the Southeast Asian currencies, as well as LATAM or any weak global South currency. If you pick up, right, rupee has been performing very badly. Okay, so that's another worrisome scenario. So we'll have to see. RBI has come up with a few interventions, and let's see if that works out or not. Doesn't matter. Based on the geopolitical scenario that is happening right now, short-term blips would be there. Okay. So I'll conclude the Nifty segment, and I'll move towards the small cap one. So this is the small cap part. So basically, what we are seeing in small cap is kind of stronger with respect to the Nifty. So Nifty is making new lows day by day, and last day also it made a new low. But the small cap made a low on 23rd of March, and beyond that it went sideways, and it recovered above the short-term moving average, took resistance around the 21 EMA, and it might try to get over 21 EMA and might hit 50 DMA, right? So there is a smart recovery that, or a smart buying that is being seen in this small cap scenario. And this is on the back of this double bottom scenario where we have discussed about this last week, that this low 37.45 it made like in the last reversal, and last week it made a low of 37.34 that we discussed. It undercut this point by 0.11, right? So that's a minor cut, but again, that qualifies for a nice double bottom formation in a small cap ETF. And beyond that, we have seen a nice positive reversal recovery, and it closed in green and took resistance around 21 EMA and standing there, right? So, and the volumes have emerged on the right hand side, which shows that small cap stocks are not as weak like how large caps are right now. So the major sell-off that is happening right now is in the large cap segment. While there is a reversal recovery or arrest in the downside in case of small cap. So that is a good sign, and we'll stick to that. And next we have the mid cap.
So if we look into the mid cap segment, so basically it's kind of in the middle spot where it's kind of weak again with respect to Nifty. Also, Nifty has tried to. Okay, we'll have to see. Like it's in the middle ground as mid cap always remains in the same scenario. So this is going to be okay, I believe. This is fine. So it might try to consolidate on the right hand side. We'll have to see. Okay. So it was a wedging upward formation that was broken, and thereafter it took resistance around this sloping line, and now it is hanging around this level, right? So again, same thing as what Nifty is doing right now. Okay, so let's conclude this one with the point that Nifty has been falling convincingly, and large caps are seeing a bit of pressure. Beyond that, we have seen that day one is there, obviously, in the Nifty, where we can see that the low of 22,182 is the level that we have to watch out for next 2 weeks, right? And we have to look forward to a follow through day. If it happens in Nifty or if it happens in Sensex, it's fine, not a big deal. Then we have the small cap index where it is trying to arrest its fall, and it's trying to not gather some momentum, but trying to stick around this level, right? So it's not falling down further. That is what we can see. And a double bottom formation is there in the small cap ETF. So that's a good sign. And beyond that, mid cap is in the middle ground as it always remains to be. So I'll conclude this section one, our discussion on the market, and I have laid down the points that we would analyze further in the coming weeks.